the standards which, drawing from what is developed in the Basel Committee, are sort of adapted to Islamic banking by the Islamic Financial Services Board.
Yes. Well, I think in terms of the capital standards, these are very much similar in terms of both in the conventional and Islamic finance, but the liquidity standards, we face the challenge of lack of a well-developed Sharia compliance financial markets. That is the key, really, the lack of Sharia compliant instruments, both domestic instruments and foreign currency instruments. But of course, this is being addressed to enhance supply, especially in local currency issuance. Many of us have a sukuk market that is developing both in the many of the countries that are present here today, and also in the money market instruments. But central banks, several central banks have also allowed placement of deposits at the central bank, and this is a means of to facilitate liquidity management in the Islamic financial system, also to broaden the range of assets and instruments. And then, of course, more recently, we have the International Islamic Liquidity Management Corporation, where 9 central banks have come together with the Islamic Development Bank, and to issue short-term instruments that are Sharia compliant in foreign currency, international, so far US dollars. And then other developments, such as other jurisdictions that has been mentioned, the UK, Luxembourg, Hong Kong, and South Africa have issued sukuk, and this contributes to the development of the financial markets. This is a key aspect in terms of compliance to, or the adoption of the liquidity standards. And then I would like to mention OIC report on liquidity management that has come out recently, and they've got 18 recommendations, and this is to strengthen the supply and demand for these instruments, to improve the financial infrastructure for liquidity management, capacity building, development of the financial safety net, which is very important because you need lender of the last resort and deposit insurance and so on, that needs to be developed. But another recommendation is for greater regional collaboration and cooperation, and this is also happening. Yeah. So these are some of the things that have made progress in this area, but this remains one of the important challenges of the adoption of these liquidity standards for Islamic finance.
Very good. Can I just add to that?
Yes.
I think there was a very important set of points that governors that you mentioned about the absence of high quality liquid assets. And what we found when we issued when we were preparing our guidance note on quantitative aspects of liquidity management, in which we have provided guidance on liquidity coverage ratio and the NSFR, is that our banks are able to meet the LCR without any problem at all, but primarily because they hold their high quality liquid assets in the form of cash and in the form of central bank reserves. So we find also that there are only a very small number of countries in which high quality liquid assets takes the form of tradable securities with zero risk weight. And those are the countries which have had for a number of years a consistent program to develop their capital markets, the Islamic money markets, and they have a consistent program of issuance of sovereign sukuk. And it's a reminder that the reason that Malaysia is ahead of the curve is that in 1983, when they passed their first Islamic Banking Act, they also passed the first Government Investment Issues Act, which was, and the both were seen to be in tandem. So in these countries which have a sovereign sukuk program, 60% or so, up to 70% of high quality liquid assets is in the form of these securities, tradable securities. In the other countries, it's exactly the reverse. About 40 to 75% of assets are in the form of cash and banknotes. So I think that's a major factor in terms of adjusting to the new Basel III framework. But in terms of the other standards, and in Basel II, Basel 2.5, the issues are very much, as Brother Hamad has mentioned, it's lack of skilled personnel, sufficient skilled personnel within the regulatory agencies to assist in the implementation process. However, I should also add that the implementation of IFSB standards is in fact much stronger than you might think, so that we have at least 4 or 5 countries which have implemented about 75 to 85% of our standards. And more of them are now coming forward with plans to implement standards, including, of course, His Excellency from Maghreb, who was committed to implement, I believe, 9 of our standards, which is about a very substantial number of our standards. So there's a wide range of difficulties. Capacity to implement is a critical feature, and one which we try to assist.
And I think that the issue of capacity is very important. That, of course, is an area where your institution or institutions like the International Monetary Fund can cooperate with the national authorities in trying to work together to address these capacity gaps, which are so important. But please, Mr. Hamad, go ahead.
Thank you. I just want to add few also challenges in the implementation of the IFSB version of Basel III. What we have in Bahrain, for example, as well as in some other countries, is over the past, let's say, 10 to 15 years, we've seen the establishment of a lot of Islamic banks, but all or mostly of a small size. So the implementation of Basel III for conventional or for IFSB version requires, a larger capital, requires highly skilled resources, and these banks do not have that features. So what we've done in Bahrain is we've aggressively called for mergers and acquisitions, not to create significant or very large banks, but a moderate-sized banks, which can basically do better business, attract highly skilled resources, and be able to comply with the Basel III requirements. Another area which we also felt as a challenge to the implementation of Basel III is given that the Islamic banks have a short history so far, or they are not as old as the conventional finance players, several or various of those institutions are not rated. And that is a challenge, because if you are not rated, you will not be able to raise capital in the market. It's especially if you are talking about additional tier 1 or tier 2 requirement, or to basically go for a public offering if you're not listed already. Of course, the issue of availability of skilled resources is, as mentioned by both Her Excellency Governor Zetti and Brother Jassim. But from my side, I feel that there is shortage at both levels, the banks level and the regulatory authority level. And without that, the implementation will be at risk. And we've seen this, for example, in Bahrain as well. We continuously lose resources to the industry. And then we, as a result, a huge gap created. The issue of the development of money market and capital market, which alluded to by Her Excellency Zetti. But I would like to focus more, because she emphasized more on the capital market. And I would like to emphasize more on the money market as well. We need collaborative efforts to develop the money market for Islamic finance. In several countries, they face legal challenges to develop a framework for money market. Thank you.
Thank you. May I turn now to Governor Al-Choueri, and ask you, from the point of view of Morocco, what are the main challenges that you see in adapting to the new standards coming from Basel, or to the adaptation of the new standards by the Islamic Financial Services Board?
أولا أريد أن أذكر على أنه بالنسبة لبازيل 3 بالنسبة بالأخص لرأس المال التنظيمي أو بالنسبة لتغذية السهولة على المدى القصير، على أنه أعطى فترة زمنية بالنسبة للبنوك التقليدية نفسها إلى 2019، وتنظن على أنه تنتمن على العمل اللي قام به المجلس الخدمات المالية الإسلامية، لأن قام بإعطاء بعض المعايير فيما يخص لا سيما المعيار 15 فيما يخص الكفاية ديال رأس المال، وكذلك بالإرشادات المتعلقة بمعايير إدارة مخاطر السيولة. تبقى هذه إرشادية، نفس المشكل على أنها إرشادية غير ملزمة. المشكل اللي مطروح بالنسبة لنا لما درسنا هذا المشكل بالنسبة للبنوك الإسلامية اللي احنا بصدد إحداثها، كيف قالت الدكتورة زيتي، هي النظرة أو الغياب ديال الأدوات المالية أو الصكوك التي تستوفي الشروط من الناحية الشرعية وبطبيعة الحال من الناحية ديال السيولة. فبالنسبة لنا هو إحداث سوق ديال رأس المال ديال اللي تستوفي هذه الشروط هذه، هذا تيطلب وقت زمني طويل. وشنو هي الفترات الانتقاليه؟ اش غادي نعملوا في الفترات الانتقاليه؟ دابا حنا اللي غادي نبداو في هذا المشوار، شنو هما الفترات الانتقاليه؟ لذا تنظن على انه خص تضافر الجهود. وهنا انت اللي رئيس القطاع في صندوق النقد الدولي اساسي، لابد تنكبوا معنا على هذا الميدان هذا باش نشوفوا كيف التطوير ديال هذه الاسواق، او على الاقل في الفترات الانتقاليه شنو هما الادوات اللي هي تمكن مطابقه للشرع والسيوله باش يمكن نتمشاو في بطبيعه الحال في التطبيق الانظمه ديال بازيل 3. لا سيما على انه الا كانوا هذه البنوك الاسلاميه غادي تاخذ في السنوات المقبله قسط وافر من العمل او النشاط البنكي والمالي، لزوما غادي تخضع، غادي نخضعوها التقييم كيف تنقولوا الان دابا التقييم دولي بالنسبه للبنوك التقليديه، لزوما غادي نوصلوا التقييم ديال النظم ديال البنوك الاسلاميه، ما يمكنش ما نوصلولوش. اذا خصنا نتهيئوا لهذه الفترات هذه، ولذا اظن على انه انت الاخ فيليناس بالتجربه ديالك لازم تنكب معنا في هذا الميدان هذا باش يمكن ندوزوا هذه الفترات هذه على احسن ما يرام. شكرا.
Well, thank you very much for the invitation, and the invitation is gladly accepted. So the fund will be there to help countries, not only from the point of view of helping you adapt the Basel standards or their Islamic equivalent and adopt them and adapt to them in terms of running them, but also in terms of the financial market infrastructures that Governor Sethi mentioned and that you have echoed, to develop these domestic capital markets and money markets, which are so critical for the implementation of monetary policy, but also for fostering the means of finance that a growing economy like yours will need. And we have seen some examples of successful examples of countries in your domain which have developed good financial markets. Let me come back now to an issue that Governor Sethi mentioned before. You talked about the safety net. And I think that this is very important, and different people have different ideas of what the safety net may be, but at the minimum, we're talking about things like deposit guarantee schemes, and we're talking about emergency liquidity assistance. And Islamic banking, by its proper nature of, the nature of deposits, of the profit and loss sharing accounts, presents particular challenges when talking about deposit insurance. And in this panel, there are countries which have deposit insurance, and there are countries which are in a different situation. And there is also quite a bit of diversity among the countries with Islamic banking. But it's fair to say that the scarcity of deposit guarantee funds prevails. There are very few countries, other than Bahrain and Malaysia, which have deposit insurance. So going first to deposit insurance, what is it that you have had to overcome in order to have a successful deposit insurance in the case of Malaysia, Governor Zeti? And then we'll go to some of you afterwards for your different experiences.
Well, we established deposit insurance about 12 years ago in Malaysia, and for conventional finance. But over the years, and I did want to say that in Malaysia, Islamic finance is not just for Muslims, because in the year 2000, it comprised maybe only 7% of our banking system. But 15 years later, it comprised 27% of our banking system. And in the sukuk market, more than 50% is participation by non-Muslims. So that is how Islamic finance has grown. And it becomes imperative that this part of our financial system has access to deposit insurance. And therefore, and our deposit insurance plays a very important role in the financial system as a discipline for financial stability, because it has a differential premium according to the assessment of risk management in the financial institutions. And therefore, it was developed in that manner when the assessment of risk management within the financial institution, in this case Islamic financial institution, and how they participate. And we provide insurance, deposit insurance for the deposits and not for the investment accounts. In other words, these are deposits where you're guaranteed to return of your the value of your deposits. However, in investment accounts, these are risks will be taken by the so-called depositor. And therefore, this is the approach that we have taken, and we've had this in place for several years now, and it's worked very well.
Okay. Thank you very much. Mr. Hamad.
Yes, thank you. I mean, I have a story to tell about deposit protection for Islamic finance. And, but first, let me just mention that, deposit protection experience in Bahrain, goes, as far as, or as back as 1990s. It's about now 23 years, experience in the deposit since we've established the conventional deposit protection scheme. The story is basically that, back to the issue of communication gap. What we've noticed is that Islamic banks promote the investment account to their customers as deposits, and we felt that this is totally wrong. You should promote it in the right way. And then we had to go and dig deep into the law And we of course, in Bahrain, we have a definition for the deposit in the law of commerce, which basically says that the deposit is guaranteed by the institution, but of course the interest on the deposit is not guaranteed. It depends, it's on the sort of arrangement or the relationship between the two in the negotiation, especially if the financial institution is facing difficulty. And that definition does not meet the investment account specifications, because the element of guarantee is not there. It's based on profit and loss sharing.
Mm-hmm.
So we had a long debate with the Islamic banks, and basically, adjusting the definition of deposit to suit the needs of the investment account holders. And at the end, we concluded by saying, legally, investment accounts are not deposits. The Islamic banks, although they agreed to this conclusion, but they said you have to protect us, because if you go publicly, which I am doing now, but hopefully, we've addressed this already.
No, nobody's listening.
Nobody
don't worry.
is listening. But at that time, they said that if you go publicly and issue that definition by law, you're gonna kill us, because all of the customers will say, what have you been telling us over the past years? Second, is my money protected or not? Because you are telling me it's a deposit. So we told them we'll address it through what we are talking about now, which is the deposit protection scheme. So we enter into, again, a debate with the scholars or the Sharia board of the central bank to basically convince them of a model which suits the Islamic banks or the investment account holders or the investment account specifications, that there should not be a guarantee by the Islamic banks, and the Islamic banks should not in any way get involved in the guarantee arrangement, and that the Islamic banks should not, or the fund solicited from the Islamic banks should not be commingled with the conventional fund, because they say we should not guarantee conventional deposits, and that they say that the Sharia board of every Islamic bank should endorse this arrangement at the time when you trigger the use of the fund. So, and also the last but not least, that the concept should be based on a takaful basis, which means a collective effort and risk sharing by all the Islamic banks. So basically then we moved on and developed the deposit protection, so that then to avoid any contagion effects of the amended definition of deposits in Bahrain.
Thank you very much.
Can I,
please.
if I could offer my cross-country perspective on this. I think this is a very interesting area of development for many reasons. We have at this moment, most of our member countries provide deposit insurance, regardless of whether you're a Islamic or non-Islamic sector. But only 5 have a separate Sharia-compliant deposit insurance scheme, and they are Malaysia, Jordan, Sudan, Nigeria, and of course Bahrain. And there are some very distinctive issues that emerge, which are common to each of them, insurability, guarantee, and so on. And they're addressing it in a way that is quite interesting. You can see that there are differences, but there are also common sets of approaches. And I think the takaful model is emerging as the one that is most prevalent, although there are other approaches. However, I would like to make 2 other observations. One is that in many of these cases, what still remains to be done is to move from an insurance mechanism towards a mechanism that is closely related to the financial stability objectives of the macroprudential supervisor. So in some cases, perhaps even in many cases, you do not really have a link between the deposit insurance scheme, the Sharia-compliant deposit insurance scheme, and resolution or recovery mechanisms. They're essentially pay boxes. Very important to have them to provide confidence. But again, clearly there's a significant work ahead in terms of the stability objectives and its connection to resolution and recovery. What is also important, and this is my final point, is to recognize is that we have surveyed about 20 countries, and we will be shortly releasing our study. So in addition to these 5 countries, there are 15 which do not have independent Sharia-compliant deposit insurance scheme, but who are now planning to do so. Maybe in 5 years' time. Now, I think what's also interesting is that in each of these countries, 15 countries, you have significant progress that has taken place in their on the conventional side, on their monetary policy operation, monetary policy capabilities, on safety net design. It is the lag, but there's a considerable lag in the Sharia compliance side. So I think what we are really saying, and perhaps it's just my personal judgment, is that we are seeing a close correlation between the effectiveness of the supervisor and the policymaker on the conventional side, and a willingness and a commitment to then move to redirect towards developing the Sharia compliance side.
Thank you very much. Let me, Governor Al-Juairi, do you want to say something about some of the obstacles that would have to be removed before you could contemplate issues regarding the guaranteeing of deposits in your banking system?
أنا أود أن أؤكد أنه في إطار القانون الجديد وفيما يخص البنوك الإسلامية أو التشاركية وضعنا إنشاء صندوق خاص للبنوك التشاركية. بطبيعة الحال احنا الآن تنتبعوا النقاش اللي قالوا الأخ ديال البحرين، واش غادي نمشيو للتكافل، شنو هو النظام اللي غادي يمكن، هذا احنا لسنا في البداية، ولكن تنظن على أنه الأساس كذلك هو يكون عاود توحيد الرؤية، واحد النوع توحيد الرؤية، لأن واخا بالنسبة للبلد يمكن تجبر حل خاص بك، الناس الآن تشوف تيكون في البلدان الأخرى، تقول كيف هذا بلد إسلامي مشى في هذا الاتجاه هذا، وانت إلا كانت الموقف ديالك دون ذلك تكون عندك صعوبة باش يمكن. لذا أنا تنحث على أنه في هذا الميدان هذا كذلك يكون واحد النوع ديال الاجتهاد باش يكون عندنا واحد الرؤية موحدة اللي تجنبنا هذه المتاعب اللي احنا بصددها فيما يخص هذا تأمين الودائع في البنوك الإسلامية.
Thank you very much. One thing that we will not have time to talk about, but which is even more difficult than anything we have talked about so far, is the issue of resolution, of bank resolution. You alluded to, Mr. Hamed, yes. You alluded to that. Yes. And this is something which is, to me, the toughest nut to crack, not only regarding Islamic banking, but also regarding global regulation. But we'll leave that for another conference on Islamic banking. But let me now turn to a final issue. We have been talking about supervision and regulation. We have been talking about microprudential supervision and regulation. And that is what allows us to, if we think of a forest and the trees, to identify individually all the trees and make sure that all the trees, all the financial institutions, all the banks are solid individually. But of course, we also have to take a systemic risk dimension and make sure that in addition to the trees, we see the forest. And this is when we come to the so-called macro-prudential part of policy, of prudential policies. And I wanted to come back to you and engage in a conversation about macroprudential policies. Maybe sharing with us how you view the role of macroprudential policies given the risks, the systemic risks implicit in Islamic banking. And we have heard today, both from the speech of the governor of the Central Bank of Kuwait, but also some of the comments that you have made that Islamic banking has lesser predisposition to incur in speculative activities and to take up leverage. But there are important, nevertheless, important issues which are specific to Islamic banking. For example, the complexity of the operations, the fact that you're so close to real activity that if something goes wrong in Islamic banking, is going to have an impact on the economy, the fact that many times there are important financial conglomerates, which include Islamic banking, but also other financial, non-bank financial institutions and even non-banks. So all of these conveys a dimension for systemic risk that needs to be handled through macroprudential policies. So I wanted to come back to you and start again with Governor Zetti. And ask you, from your point of view, what is the role that macroprudential policies can play in further enhancing financial stability when Islamic banking is important, like in your country? What kind of tools do you think that could be more useful? In a way, what would be the best way of putting in place or developing macroprudential policies that can be useful for financial stability when Islamic banking plays an important role?
Right. Actually, the framework that we have adopted in Malaysia, we apply the same macroprudential surveillance and policy framework to both Islamic finance and conventional financial systems, and they comprise of 5 elements. And the first is to have very clearly defined mandates and powers to address the systemic risks that occur. And so our Central Banking Act and our Islamic Financial Services Act provide this clarity of the mandate and the powers that we have to address it. And these are the powers to provide regulation and supervision, essentially, powers to enter into arrangements with other regulatory and supervisory authorities, and powers to avert or mitigate systemic risks, that is, providing liquidity or capital support as it may arise. Then we have an integrated macro and microprudential surveillance and risk assessment. So these are some of the things that we